Partha Sarkar is the global CEO at the company. He now joins in on the show. Thanks very much for being with us, Mr. Sarkar. Now, you're targeting a top line of over $1 billion in the next 3 years. In order to reach this milestone, of course, you'll have to grow faster than 30% versus the current rate of the mid-20s. Do you think that you can touch this kind of a target?
So if you were to look at it, we were about 1,000 crores in 2011. And we grew the business to about 2,000 crores in 2013, which is virtually doubling the business in 2 years. So we have had a track record of high growth. So we're not really, it's not something that we haven't done before. Doubling the company in 2 years is aggressive growth, and we have achieved that in the past. What we are focusing on is growing profitably, being relevant and differentiated in the marketplace. If you are able to do all of that, then I do believe that the growth numbers can be sustained. And the number of $1 billion, whether it comes in 3 or 4 years, nobody is really holding us to the fact that, okay, you've not reached it in 3 years, we'll come close to that in 3 years. It is a stretch target. If you meet it, well and good. If not, we'll meet it in the 4th year.
Give us a sense of the geographical traction across your key markets, and how is demand outlook shaping up in the US and Europe, and how is momentum building up in Canada and Philippines, for example?
So where we stand out now, the demand environment in North America, both US and Canada, is very strong. US has had the strongest pipeline for a very long time, both from our existing clients and from our new logo wins. Canada is a virgin market. It hasn't yet experienced outsourcing in a big way. So it's still a lot of captive-driven operations, and we are pulling out the captives into our businesses. So that's outsourcing, but that's onshore itself. Canada is new to offshoring, but we are seeing some early encouraging signs of offshoring. Healthcare reforms going to add about 39 million new people in the insurance fold. That's going to result in higher volumes for sure. UK and Europe is a bit muted, but that's, I think, a 6 to 9 month phenomena. We do believe that in about 6 to 9 months, growth will be back in the Eurozone as well.
Wanted to focus in on revenues and how they're growing across your various verticals: telecom, healthcare, consumer electronics, and particularly with further headway into financial services. Do you think that perhaps BFSI can double its share over the next couple of years from the current 8.4%?
See, healthcare reform, as I told you, is bringing in about 39 million new consumers into the insurance space. Whatever we've heard statistics about, despite the malfunctioning of the website, I think there have been 2 million sign-ons already. So that's going to drive a lot of volumes in the healthcare segment for us. And that's what we are very bullish about. The telecom, technology and media sector, TMT, contributes today about 39% to 34% of our revenues. And that's expected to grow strong as well, because that's where maximum change is happening. Telecoms now become a part of our lifestyle with mobility and all of that, right? So that will continue to remain an evergreen sector. The consumer sector is actually consumer durables and FMCG. FMCG is steady. Consumer durables has its ups and downs as one player wins and one player loses. So fortunately, we have both kinds of players, people who are the Japanese consumer electronic players, we have them in the fold as well as firms like Apple, whom we service out of Canada. So consumer electronics continues to be a very exciting area for us, and we do believe that that will also grow. In the BFSI space, I'm very bullish about the Indian market, because I believe in India we have not seen much outsourcing happening from either the banking or the insurance sector because of government regulations. As regulations are eased, we believe that that's the new market that's going to open up in the India domestic space, and that's what we are hoping for.
Now, NASSCOM had earlier forecasted 12.7% growth in domestic BPO industry as against 12 to 14% for the Indian IT industry. With it fairly upbeat for FY15, the higher projections expected, will BPOs like yours match and even outpace the other IT counterparts?
Well, we have our CAGR, I've repeated, is 25% in the last 5 years. So we are very bullish that we will be able to maintain a growth rate in excess of 20%. And even if you look at the NASSCOM projections, you will see that the NASSCOM projections for BPO growth rates are higher than the IT growth rates. In fact, if you look at the Everest study, in 2016 they are predicting that the BPO market share will almost be the same as the IT market share. So we are seeing similar trends. So we are pretty confident that we'll be able to improve upon our growth rates today. So far as domestic is concerned, we've not exited the market, but we've exited certain relationships that were not profitable. Those were mainly in the telecom space. As I said, if the BFSI sector opens up, that's going to kickstart the India domestic growth again. That's why we are not completely exiting, because I do believe that the India story is one day going to turn very positive. And so far as margins go, our margins historically, the second half of the year is better than the first half of the year. So there is headroom for growth as we exit towards March from where we stand today.
Okay, after receiving rate increases from several clients in the domestic operations in the first half, can we expect more in H2 as the BPO business turns more attractive with price firming up and deals picking up?
I think you are right in many ways. There has been a certain amount of shake-up in the India domestic space. I think the excess capacity that we had earlier seen is probably on its way out, because the players who had come in with rock bottom prices have obviously suffered so much losses that they can't sustain it, and therefore we do believe that the price points are on its way up. We've also exited quite a few relationships that we had which were not profitable and reduced our headcount in their domestic space. So the business has gone down from 160 crores to about 130 crores this year. Will the next year be different? The price points are better. If BFSI opens up, we do believe that sector price points are probably going to be better than the telecom sector. So we are hopeful, but let's say we are just being cautiously optimistic. Unless there are definitive signs and contractual commitments to reasonable price points, we are not going to be increasing our footprint in the India domestic space.